Welcome back to the Retire Young Radio Show. I am your host, Joshua David, on a mission to improve financial illiteracy worldwide. If you're just tuning in, Al was shedding some light on the shorter term assets like the Forex market and like the futures market, how fantastic they are, especially the Forex market, because that's a slower moving market, but also how to use the leverage or the buying power. These are both 24 hours a day as well. So people that work during the day can still participate in the evening with these assets because they're still open. And Al, I want to continue this discussion with some of these leveraged assets. And leverage is a great tool to have, but you want to use it properly. And there's a lot of people that are wanting to learn more about their retirement accounts and understand more of the leverage in the retirement accounts with options, right?
Right.
So just explain more in detail what options are and why we're seeing so many people want to learn more about them, especially in their retirement accounts.
Yeah, we're seeing more and more of our students choosing options now as the asset that they want to learn how to trade. Options can be used pretty much in every different point in your financial world or your financial life, kind of more intermediate or long term. And when you go into retirement, there's some things to consider that are really critical when you retire. Number one is protecting what you have. How do you do that? Well, options can be used as a protection vehicle, as basically as an insurance policy. Also, you need to understand or learn how to generate income. When you go into retirement, what happens to your job, the income from your job? It goes away. All of a sudden, you are now faced with a situation where what you had relied on to pay your bills and get you through life is gone.
Well, you're unemployed now.
You're unemployed.
That's like being laid off.
Exactly.
For an extended period of time.
Yeah. Well, think about it. If you're still working now and you woke up tomorrow and your job was gone, the income was gone, would that impact you, the way you live? Well, at some point in time in retirement, you're going to be faced with that situation. So what we think is the most important thing is learning how to generate income off of what you have in retirement. Not how much is there, but how much you can generate an income.
And there's techniques and skills that are designed to do that.
Right, and options is one of those. You can use options as an income-generating vehicle off of a portfolio that you have worked maybe 30 or 40 years putting together. You don't have to sell anything to generate a profit or realize a profit. And options, again, at the same time, can be used for protection. But one of the great things about options in retirement is that you can take smaller amounts of a retirement account to utilize with a larger overall investment.
Are you basically saying you don't have to take your whole capital, you take chunks of it? Is that what you mean?
Exactly. Sort of like maybe making a down payment on an investment instead of putting the full 100% of the capital up. And that's the great thing about, especially with the market the way it is now, with these stocks that used to split every time they got close to $100 a share. Now they're not doing that or not doing that as often. There are a lot of companies out there that are trading $500-600 a share up to $3,000 a share. Well, especially when you're in retirement, maybe you don't want to take a large amount of your retirement money and put it into an investment. But what if you could take just a small portion of that and still have the potential to participate in a big way? We talk about that in these classes. We'll show you how to do it. But just as an example, if you want to invest in Apple stock, if you want to buy 100 shares of Apple stock, now it's going to cost you about almost $12,000 to do that for one position. Well, maybe you can still control that 100 shares of stock using an option for maybe around $500 or $600. It depends on the different option that you're looking at. But the point there is that you can still participate with a higher valued investment or stock like Apple or Google or any of those with a smaller upfront amount in a retirement plan. So you don't have to use a large amount of what you have. And again, learn how to generate income off of what you have. And then also, why not grow the retirement savings account that you have? Because you're going to have to take some money away from that. You'll have minimum required distributions you have to take. But why not still continue to grow that account? So maybe near the end of your life, you want to pass that on down to your kids or your grandkids, or maybe for some of you, your great-grandkids. Maybe there's a charitable organization that you want to participate in. But don't assume that you just have to take what you've worked hard for, put into a 401k, for example, or an IRA, and that's it. You just utilize that money. those accounts, those savings can still grow, and you can also generate income off of them.
And just to clarify too, when he's talking about smaller amounts of capital, that's a general term. So that could be a general term as far as what everybody's thinking of. So with options in retirement accounts, they give you more options. It's all about opportunity in retirement account. That's what everybody wants to strive for at one point, is having the opportunity to be able to retire and retire with confidence. So, Al, I want to talk a little bit about capital management, right?
Mm-hmm.
And to properly manage your capital, who's going to be the best steward of your money? It's going to be yourself. It's not going to be a friend or a friend of another friend that has a real relative that's a financial advisor. You're just put into a bucket of everybody. Talk about self-directing. Why is that so important to understand? How you're seeing more and more people want to do that and have more comfort?
Well, I think I always like to look at my investment money kind of as an employee. If you own a business and you have employees, one of your goals is to get the maximum productivity out of each employee. And that's the way to look at your investment money also. Every dollar that you have, why not get the maximum benefit out of that dollar? And the way that you do that is to get control of it on your own. Right now, for most of you, you probably have a 401k or 403b or some kind of an employer-sponsored retirement account. Now think about it. Who's managing that? Who's making the decisions as to what investments you are into, what investments you maybe rotate out of and into something else? For most of you, if not all of you out there, it's you. You're making those decisions, yet you're paying somebody to do it. If you self-direct, since you're already making your own decisions, you self-direct, you do that without paying fees. Because in any kind of an account where there is an advisor involved or a plan sponsor, they're going to take a cut of that. And that money is taken away from you. Not only is it taken away from you, but the compounding impact of it is lost. And that can have a huge impact on how you live, how much money you have in retirement. So by eliminating the fees, self-directing, you've taken care of one of the issues. Having a self-directed IRA also gives you access to a number of different assets. There are the assets that will participate in an up market. There are the assets and strategies that will participate in a down market in your favor and also in a sideways market. And there's strategies for all of those if you just get the education to learn how to do them. And you can use those in a self-directed IRA. The one thing you can't do is to short something, and we'll talk about shorting in these classes. But you can get essentially the same impact by using options or what we call an inverse ETF, an inverse exchange traded fund. And again, we'll talk about these in these classes. But you have access to these assets that will allow you to participate in any direction that the market is going.
And that's the key, because there are multiple directions of the market. They go up, they go down, they go sideways. But everybody talks about the up and the down markets. So if you have comfort and confidence in up markets, learn the skills and the techniques of down markets as well. That way you have more opportunity, and that's what it all comes down to. And, in these investing classes you were mentioning, Al, you really get into more about how to manage capital and navigate these volatile markets, but really our step-by-step rules-based strategy for trading any asset class in any market. And we talked about the Forex market, the futures market, the options, and the stock. There's opportunities in all of these, just understanding which one is best for you based on you. Al, we have a lot more to discuss in this next segment. You mentioned inverse ETFs, and that's how to participate in down markets. I wanted you to explain what shorting is, how that's done, more into detail on inverse ETFs, but also fees in retirement accounts and how to lower them by having the proper plan. We will be right back.